Hi and welcome to my final morning report chart proposal on Thursday the 26th of November with me, Rich Perry, market analyst at Handtech Markets. Moving on to gold, and we've had this sort of consolidation in gold in the last week or so really. We had sort of since the middle of October really, a big correction of several weeks actually, but since forming a low at 1065 that we saw sort of middle of last week, it's basically gone sideways, not really gone anywhere. Interesting that that has happened because you've got the consistent bear candles that were coming through, but now you're sort of getting a fairly sort of mixed hodgepodge of candles, not really any major direction showing. Although you would still argue you're still seeing this sort of sequence of lower highs. You one of 1098, 1087, and then 1080 yesterday, and the day before 1080.50. So you're seeing this sort of consistent decline, but as yet the selling pressure is not really coming through anymore, and it's not really broken down. That those July August lows of around 1077 have not really been confirmed as a breakdown. I mean, yes, you had one trading day trading below that, but never really sort of decisively broken. The next key low below here, below 1065, is actually the February 2010 low of 1043.75. I still think that this chart has further downside in it, and I'd be selling into rallies, but it just seems as though at the moment that the selling pressure is just sort of beginning to dry up, and you could well see the beginnings of a bit of a technical rally, but at the moment it's not really happening yet. You'd say that you'd be certainly looking out for the initial resistance at 1087, but I think more importantly 1098, which was that reaction high that we got a couple of weeks back, which again found some resistance pretty much bang on the old support from September. So that is a key level. Certainly that's a key level. But at the moment, 1080 as a near-term basis is being formed as support. But I mean, as resistance. Sorry. But you look at the last sort of week or so, it's basically trading sideways, isn't it? I mean, the momentum on the hourly chart is basically going between 30 and 70. That's pretty indicative of a sideways trading outlook. You've got the moving averages on the hourly chart, which are basically flat, slightly negative on a couple of them, but just generally speaking, you're not really seeing the selling pressure, the precipitous selling pressure that we had seen throughout October, early November coming through anymore. So it's interesting that we are seeing this, and I think gold is one to watch because you need to be careful. You may well see the propensity for a sharp rally. We get these moves on gold quite often, where you see this sort of short squeeze coming through as the selling pressure just abates somewhat. But it'll be interesting to see how this one goes. But certainly watch out. Initial resistance 1080 and then 1087, but the main resistance coming in at 1098. So few things to watch out for there on gold. But I wish you good luck in your trading today, and I will speak to you again tomorrow. Thank you.